Hello and welcome to Asset TV. I'm Erin Rael and I'm joined in studio today by Seán McCarthy, CEO of BAM. Seán, thank you for being here. Thank you for your time and your insight. I want to dive right in. Market headline for 2024, crypto, AI, stocks, all of this is what's leading the way. But quietly, the Muni bond market that has put up a record year in terms of new issue volume and also returns. So what is driving this growth here?
You know, that's a really good question, and it has been a record year. The market has produced about $500 million worth of new issuance, and the vast majority of that has been in new money infrastructure. So really, state and local governments, which actually finance about 80% of what you think of as infrastructure, bridges, tunnels, roads, hospitals, schools, clean water, they have issued a tremendous number of municipal bonds for these projects.
Does this have to do with the infrastructure bill that passed in the Biden administration? Where are all of these funds coming from the municipalities to build like this?
So that's interesting. You know, they put the bipartisan infrastructure bill provided a lot of funds to bridge municipalities through what they thought would be a real revenue shortfall. But it turns out a lot of that money didn't get used. And it's now all sort of expired. So what you see happening now are municipalities raising money for these essential projects themselves. So they're either being supported by the full faith of the community itself, that's called a general obligation bond, or it's a revenue bond where it's, for example, if you're paying for your electricity, your electrical bill is paying for part of that financing to build those projects.
Okay, hence the volume of new issuance.
Exactly.
Yeah, they're raising money for these infrastructure projects that we're seeing pretty much everywhere. Is this just domestic, or are you seeing a similar thing globally?
So globally as well, it's the same thing. But in the U.S., it's two things have been happening. Interest rates are starting to go down, number one. Number two, as the federal monies have either expired or have been used up, each municipality has to develop a way to come to the market themselves and for their projects. Now that's important to know because what we focus on are essential public purpose municipal bonds, and I think what you see happening in the market is different successful strategies in order to try to get their schools financed or other essential projects. So, for example, if you think about a lot of bonds are voter approved, and in this last election, 80% of the bond approval initiatives that were on the ballot were approved. So that's really kind of amazing as just a support from the ground up for these essential infrastructure projects.
That's so interesting. And what kinds of projects are we talking about? Just these essential infrastructure projects that you mentioned. What are the specifics and the nitty-gritty?
So it's really bread and butter. As I said before, it's sort of roads and schools, clean water, power. So things that you just think about using every day. It can also be more complex things like convention centers or sports, sort of Giants Stadium. All of those things would be financed through the municipal bond market.
And what does this mean for investors?
So it means a couple of things. Lots of opportunities to invest. And if you think about tax-exempt bonds, it's quietly been a powerful driver in the market. Right now, on an after-tax basis, the municipal bond market is producing about a 6% return, which for essential public purpose and extremely low risk, that's good. Made even better if you use bond insurance.
Absolutely, and particularly if you don't have a high risk tolerance, that's
exactly.
a nice yield for sure. Exactly. How is BAM doing this year, Seán?
BAM's had a record year, actually. So we'll close out the year having guaranteed $20 billion worth of transactions this year for 47 different states and the District of Columbia. So it's been really a terrific year. And we really finance things from as small as a general obligation bond for a small community to very large transactions that would be for large healthcare systems or for states.
So all of it across the board,
yeah.
Small and large. What is your 2025 outlook?
So that's interesting. So first I'd say it's hard to say. just because there's, I think if you're just looking at the market environment, I think it's going to be another record year for volume. On the other hand, I think it's quite possible there could be some tectonic changes to the municipal market itself coming from Washington. So if that's the hard part to predict. I think the demand for financing projects and refinancing projects to lower their costs is going to be paramount. But if you think about any changes, whether it's a cap on the rate or just some sort of change in the way the market dynamic works, I think that could have an effect one way or the other.
How will Fed policy play into that?
So, well, Fed policy plays into it in one straightforward way is that Fed policy, if they continue to lower interest rates, that will create refinancing opportunities and the ability for municipalities to lower their costs of debt on the projects that they've already financed. And so I think that as interest rates, if the consensus becomes a reality and that interest rates are going to drop at least a full percentage point next year, I think you'll see not only a lot of new money for new projects come to market, but you'll see a great deal of refinancings effectuated as well. For sure.
Is there anything else you'd like to add?
So no, I just think that the thing, if you think about our market, about 44% of all municipal bonds are owned by private high net worth individuals. An additional 20% are in what I would call proxies for retail or mutual funds. And so if you think about that together, the issues that we're faced going forward, where I think differentiating between strong credits and credits that might be facing some challenges provides expertise. And I think one of the things that I would encourage people to do is carefully analyze each investment that they make. I would encourage you to go to BAM's website because we provide a credit summary for every transaction that we underwrite. We update it annually. And so if you think about what's going to happen in the future, I think the thing to look at is, as a AA insurance company backstopping your timely payment of principal and interest when due on the bonds, I think next year is going to be a pivotal year in terms of what changes happen in the market, and we're here to support that activity.
Seán, thank you for your time and for your insight. Thank you for watching. That was CEO of BAM Mutual, Seán McCarthy. I'm Erin Real, and this is Asset TV.